Well, folks, this is just awful, okay? What's going on in the stock market? What's going on outside of the stock market? I got to show you something very interesting that I can almost guarantee you 99.9% of you guys did not see here today. And this is in regards to the venture capital space. And a leaked document essentially is out there from one of the biggest, VC related things in all of the world, okay? And this document that was leaked here today is downright scary. And I'm going to show you that document. We're going to go through that together so you can kind of know what's going on here. But when you see things like that happening, it really makes you say, oh boy, what in the world's going on here, okay? So where I want to start today's video is with Tesla, my Esla. Oh boy, okay? Tesla, my Esla stock is in some deep trouble. The stock is now down 46% year to date, and the stock price has just been in a vicious decline for several months now, right? And the worst part for Tesla is not just it's in a very near impossible market where the Nasdaq's down over 30% just year to date, right? But we also have this Elon Musk drama. And I'm telling you, this Elon Musk drama is probably worse than I've ever seen it. And I've been in Tesla stock for many, many years. And I've been through a lot of the Elon Musk drama with the SEC and all those sorts of things, okay? But now he's trying to go political with all this. There was a story at a Business Insider about him on a private jet. And, if you want to look into that whole situation, you can. I'm not even going to talk about that. That's, a whole situation in itself, okay? So nonetheless, this is not a good look for Tesla stock. You cannot, in this sort of market, you cannot have drama like this in this sort of market. In a bull market, it's fine. Like Elon, people kind of laugh it off in a bull market. It's like it's Elon just being Elon. But when you got all this sideshow in the Twitter situation, you can't have that in this sort of market. You have that, your stock's going to be absolutely obliterated, essentially, okay? And that's essentially exactly what's going on here. And, as I've stated with Tesla, we all know about the long-term business model of Tesla, right? And it's in a great place. But the thing I've consistently said is I'm worried about how orders come in the back half of this year. And I continue to be worried about that. And we'll see, but the orders that come in the back half of this year is what sets up 2023 numbers. And that's what I'm very, very concerned about. And so we'll see what happens, but obviously Tesla stock is just not in a good place right now. Now, personally, am I planning on buying Tesla stock or selling any of my Tesla shares given this move in the market, right? Well, for me, I'm not planning on buying or selling. I'm just still planning on holding the Tesla shares I have. I have I think 500 shares left. I've taken a lot of profits on Tesla over the last year or two, but I have about 500 shares left. And now I'm not planning on buying. I'm not planning on selling. When it comes to me, there's just, in my opinion, a lot better risk rewards out there in the market than Tesla, my Esla. And not to say Tesla can't be a moneymaker, but I also think there's also significant risk that comes with Tesla, especially if orders are weak going into 2023, and those 2023 numbers are bad. Tesla could be $400, $500 stock, maybe below that. And so these are just some kind of things to keep in mind when it comes to Tesla. Okay. Now, in terms of big tech, everything was kind of getting hit for the most part today. There was some short covering at the very end of the day before the market closed, just because shorts don't want to carry over the weekend, essentially. But that just is what it is. That's a little short covering kind of rally at the very end of the market, but that's about it. But nonetheless, you're looking at these stocks here today. Apple just hit should be a new 52-week low for Apple at 135 or somewhere right around there for Apple. Microsoft's getting pretty darn close to a 52-week low now, if that's not a 52-week low. Nvidia's right there. AMD's right there. Obviously, Tesla's right there. Tesla technically, 52-week low, if I recall, is a little under 600, so it's not quite there. Shopify's pretty darn close. So basically everything in big tech is either super close to 52-week lows or at 52-week lows right now. There's just no strength in big tech at all right now, and it's like, where did all the money go? And there's just no money in any of these stocks right now, right? So you're looking at the markets in general. The Nasdaq's now down 31% as of today, over 31%, and the big number happened, folks. It really happened today. The S&P 500 finally hit bear market officially, which means over 20% down. This is a huge moment for the market because we've been in bear market for a while on the Russell, which is small cap stocks. We've been in a bear market for a while on the Nasdaq. But there the S&P 500 was holding up, right? And still out of bear market. And it's like, come on, man, just hit the bear market already. Well, Officially today, it has hit bear market. We're now down over 20% at one point here today in regards to S&P 500. The Dow's getting pretty darn close. These have lagged the NASDAQ big time. That's not normal. Usually there's about a 3 to 5% difference, 3 to 5 percentage points difference between the NASDAQ and kind of the S&P 500 and the Dow. So essentially what that tells you is the S&P 500 and the Dow likely have some catching up to do, or the NASDAQ's going to make a comeback. One of those two is going to happen essentially, because you don't get these sorts of spreads for very long. So either the Dow and the S&P are going to fall considerably more over the next couple months, or the NASDAQ's going to start coming back. There's going to be one of those two scenarios essentially, okay? But it's not a good situation, right? Y Combinator. Some of you guys might have heard of Y Combinator before. Some of you might not have. But basically, it's a startup accelerator launched in 2005. They've invested in 3,000 companies. Some of these companies include some of the biggest companies in the world: Stripe, Airbnb, Cruise, PagerDuty, DoorDash, Coinbase, Instacart, Dropbox, an investment of mine, Twitch, Reddit. Okay, and that's just some of the successful companies they've invested in over time. And so Y Combinator is a huge deal. And if you talk to anybody in the tech space and you say Y Combinator, everybody knows what you're talking about. If you say Y Combinator in the VC space, everybody knows exactly what you're talking about essentially, okay? This isn't like this is some under the radar thing. This is the big deals, right? So Y Combinator, this is a leaked email here, okay? Y Combinator just put out an email to their people, okay? And basically it says, during this week, we've done office hours with a large number of YC companies. They've reached out to ask whether they should change plans around spending, runway, hiring, funding rounds based on the current state of the public markets. Now, it goes through all of this kind of advice, I guess you can say, that Y Combinator is giving. But the first sentence is the most telling. No one can predict how bad the economy will get, but things don't look good. Okay, now that is scary. When you hear Y Combinator say, things don't look good, scary, okay? Downright scary. And so what's going to happen in the VC space and what's already happening is money's drying up. Now, this is a huge problem. And the reason this is a huge problem is because so many companies are funded, unprofitable companies that need the next round to get money to keep their businesses afloat, right? Now, and a lot of those businesses, aren't going to be able to raise. They're not going to be able to raise. So which means they're going to have to either sell out to another company or they're going to go under ultimately. And never mind that, if you're any sort of brand new startup, good luck trying to raise money right now. That's not happening. So this means essentially there's going to be a lot of jobs lost over the next 6 to 12 months, in my opinion, in the whole tech space. A lot of developer jobs are going to, developers have been in a huge position of power for quite some time. That's about to end. That's all I'm going to say. The only reason developers have been in such a position of power is because of the VC space. And there's been so much money sloshed around that you could basically have any idea for a company and be like, hey, I want to do this. And it's like, oh, yeah, here's $10 million. Oh, here's $100 million. Just, build your thing here, okay? And so when you have that much competition, developers, oh my gosh, they can command any price essentially because they get all these offers from the big tech companies. Plus, on top of that, you got all these smaller companies. But now all of a sudden we're hearing about big tech freezing hiring, right? Simultaneously, you're going to have all these startups just be absolutely basically killed off, essentially. And so this is going to lead to actually a lot of jobs being lost in the tech space over the next 6 to 12 months, in my opinion. It's going to be ugly, okay? That's a scary leaked email there, okay? Now, one of my favorite things to keep an eye on right now is the price of lumber. You want to talk about an interesting thing to keep track of. Lumber now on a 3-month basis is down 43%. 43% lumber. Holy smokers, this ain't no jokers. Pretty much they're going to be giving away trees for free. Oh my gosh, okay? Wow, interesting, okay? Now, this is interesting. The recession is likely. The former SEC chief economist said, first off, I didn't even know the SEC had a chief economist. That's news to me. But basically they're saying it's very hard to stop inflation without a recession. Now everybody's talking about, how you prepare for a recession and these sorts of things. And I'm like, oh my gosh, man, Like they're lagging big time on all this. And I'm seeing all this stuff all of a sudden pop out now recently this month about like how to prepare for a recession and, prepare for a recession, things like that. And I'm like, they're lagging, man. Back in January, I put out this video. I said the recession's already here. I'm preparing for recession. And in that video back in January, I covered exactly, basically why I was preparing for recession, what I was doing. I was kind of out in front of this whole thing. The difference between, I guess you say, me and a lot of others when it comes to recessions is I invest during a recession. Most people pull back. They don't invest any money during a recession, right? They're like, whenever the recession's over, then I'll start investing again. So for instance, a lot of people did not invest in 2008, 2009. And 2010 and 2011. A lot of people didn't start to invest again until 2012 when they felt like, okay, we're definitely out of it. Because even in like 2011, there was a lot of double dip recession fears, right? So a lot of people missed a massive opportunity from basically 2009, February 2009 through 2011, where the market went beast mode and countless stocks were up 50%, 100%, 200%, 300%. And a lot of people just ended up missing that. So with me, I'll prepare for a recession. I'll make the moves I have to make so I can get through that. But I invest during that entire thing. And so I'm looking at this recession and I'm like, I'm investing during this whole thing. I'm going to continue to buy assets I love for the long term at significantly discounted prices. And that's what I do. And it's just kind of been disappointing to see how much everybody's kind of lagged on like preparing for a recession. Because here's the thing, we're likely already in recession. So if you're preparing now, it's too late. Like you had to be prepared for this stuff prior to this, right? And so anyways, CCL. I have not talked about this stock in 100 years. What am I about to say about CCL? Well, this is actually interesting, okay? CCL. So in terms of history with me with CCL, I started buying CCL stock a couple months before Rona started, okay? And this was something I lost a lot of money on CCL, like I don't know, probably tens of thousands of dollars I lost on CCL because I started buying this like a couple months. It was like the worst timing in the world. All of a sudden I'm buying the stock, and CCL was a good company, very well run, big dividend payer, profit machine, cash flow machine. And all of a sudden, like a couple months later, they're like, oh yeah, we're going to shut down the worldwide economy and there's going to be no cruising for like the next 2 years. Oh gosh, man. It was a disaster. But nonetheless, CCL, I gotta say, it's actually getting to some pretty appealing prices. It's $13 a share here today. With CCL, recession is not nearly as bad as what they've gone through. This is a thing for a lot of these travel companies. There's nothing worse than Rona. Even if you get a recession, a recession is still far better than you have to have your whole business closed and you can't do any business, right? Because at least CCL can like discount some tickets, and even in a recession, people still do travel. It's not nearly like it is when there's not a recession, but people still do travel. And so the fact that they can still do cruises is like a big factor. So for the travel companies, the interesting thing is a lot of people are valuing these stocks like this is worse for them, but this is actually way better for them. If you as a company, would you rather have your hotels closed down and have zero revenue, or be in a situation where you could have your hotels open, your cruise lines open, your airplanes open, things like that? Every single one would say, yeah, we'd much rather have open than closed, because at least we get some dang cash flow going in this baby, right? And we can figure out how to make it work, and we can figure out how to be profitable. But we can't figure out how to be profitable in a situation where travel's not allowed, okay? And so I look at a stock like CCL and I'm like, dang, man, that's gotten pretty darn appealing. Am I going to buy CCL? Probably not. But the main reason is there's just too many other deals in the market right now that are significant discounts. But I thought I would just draw that one to people's attention. Another stock I think is really intriguing right now is Uber. Uber stock. This stock is down on a 1 year basis 52%, almost 53%. You want to talk about another company that benefits from the fact that the world's just been opening back up? It's Uber. And so, this is one, and also keep this in mind, guys, okay? If we're talking about a situation where the economy gets bad, a lot of jobs are lost. Guess what? This is going to make Uber's life a whole lot easier, because Uber's had a lot of challenges getting drivers and things like that, because everybody's had all these good job opportunities and things like that. If that goes away, guess what? All of a sudden, there's a lot more Uber drivers out there, right? Because if you fall in any sort of hard times and you can't get a job, Uber starts looking pretty darn compelling, right? Oh, I'll do Uber Eats, I'll do Uber, And so this is a whole situation that could actually end up benefiting Uber, right? And the fact that, once again, travel's opened back up. The bottom for Uber's business was 2021. 2022 is going to be better, much better for Uber than 2021 was. 2023 is going to be much better. And that's regardless with the recession. Whether we have a mild, medium, or a big recession, don't matter what. Everything's better with travel being opened than not, okay? This is interesting. JP Morgan just fell to another low, okay? Year to date, the stock's down 27.5%, but just fell to another low here today. And the interesting thing about JP Morgan, and for full disclosure, I not just use JP Morgan, but I also am invested in the company in my dividends only account, okay? It's an investment of mine. One thing I'll say about JP Morgan, and pretty much this goes for all the banks, these babies could have big legs lower from here. Now, a lot of this is going to depend on what happens in this whole recession situation. Once again, is it a mild, medium, or a big recession? Because we haven't even got to credit fears yet. We haven't even got to the stage yet where people are worried about, folks losing jobs, not being able to pay credit card bills, not being able to pay mortgages, not being able to pay car loans, things like that. We haven't gotten to that stage yet. And so the banks have all been hit, right, without even that fear in there. Now, if all of a sudden we get a situation where we start getting real credit fears, mortgage fears, auto loan fears, things like that, JP Morgan, next thing you know, that stock's going to be an $80, $90 stock, maybe even below that. And all the big banks would take a big leg lower from here, okay? We haven't had that yet. And so that's why the stock is still $100+. As long as we don't have that, the stock will be $100+ stock. But if you have that, get ready for a big drop, way bigger than what you've seen. And, that would be a moment where the stock would go down 50% plus year to date. If you can get some real credit fears out there, oh boy. And keep in mind, there's no SPACs happening. There's no IPOs happening right now, initial public offerings. None of that's happening right now. So that's not benefiting JP Morgan, and none of that's going to happen anytime soon. The SPAC market, the IPO market, at the earliest, it could start getting going again in 2023. That's at the earliest. You could be looking at 2024 because a lot of these companies are not going to go public until the public markets are in a much, much, much better place. And in order to feel like that, you got to see consistently for like a 6-month span, like, oh, the public markets are looking good. Let's take our company public. We're quite a way away from that situation, right? Affirm. This is a stock that year to date is down almost 74%. This is one of those buy now, pay later companies. Huge, obviously, in the space. And Square is very exposed to that space. Affirm is very exposed to that space. PayPal, which is a stock I've been buying recently, is also exposed to that space, but they're to a much lower extent than somebody like a Square and especially somebody like an Affirm. But even when it comes to a stock like Affirm, their last numbers were great. I got to be honest, Affirm's last numbers were really phenomenal. But when it comes to Affirm, this is a company that unfortunately could go considerably lower from here if you really start to get credit fears, which once again, we have not gotten those fears yet. But if all of a sudden you start to hear about unemployment going up, if all of a sudden you start talking about job losses, if all of a sudden you talk about those people that have been doing all this stuff, this buy now, pay later, not paying, oh gosh, you want to talk about Affirm at $12, $10, $8. That's when you get that sort of situation. I mean, look at how far the fall's been without those credit worries. If you add on those credit worries, oh my gosh, okay? And so in regards to anything banking related, anything buy now, pay later, unfortunately, if you got real credit worries, those ones even have another leg lower. So let's hope that doesn't happen, but it's definitely a possibility. I saw this. I just thought this was funny. Justin Thomas, by the way, net worth of $55 million, says he's blown away by high prices of beer and food at the 2022 PGA Championship. Man, you know how expensive beer and food has to be at a golf tournament for a guy that's worth $55 million to say, this is too dang high? Holy smokes, okay? Inflation's even got him. Oh, man, I thought that was just funny. Something funny I got to share with you guys. Now, I did this video 2 days ago, and if you didn't get the chance to watch it yet, watch it. I'm talking about massive layoffs coming. And yeah, I mean, when I look at what's happening in the VC space, when I look at what's happening with the public companies, valuations, the business climate, it's just hard to be bullish on employment and those sorts of things. And I covered this also in a video recently that, you could have the stock market actually moving up while there's economic devastation going on. We saw that in 2009 when the economy was in a horrible place, 2009, 2010, and the stock market going absolute beast mode. So that's why I continue to invest during a recession. But, I can say from the employment side, I don't think it's going to look pretty over the next 6 to 12 months. I think we got a lot of pain ahead in terms of that. And real estate is the next leg. I did a video all about real estate last night on the channel. If you didn't check out that real estate video, I show some very important things that folks don't even have access to. So definitely check out that. Follow me on Instagram. It'll be pinned comment down there. Send me a DM, say hello, and tell me how you're getting through this market. Much love and have a great day.